Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. This is going to be a little bit of a shorter session here today, simply because I have class to teach at the top of the hour, and we also have a Fed announcement today. So things are a little bit slow out of the get-go here in the market ahead of that event. I always like to put together a nice little chart deck for you guys over on YouTube, just give you an idea what it is we're going to talk about here today. And I do post this chart deck. Kevin does a great job of posting this in the lounge, so anybody on the site who wants a copy of this chart deck for your records, just pop into the lounge and grab it after we finish. But as I had sort of alluded to right out of the get-go here, today is a Fed announcement day. FOMC decision on interest rates down in the United States, 11 o'clock Pacific time, which is in about 45 minutes. And then we have a general rule: do not trust the market for one full hour after that decision. And the interesting thing is that they actually have a press conference following that, because I think the Fed themselves saw that a lot of sort of market participants were waiting for a full hour following the announcement before making any decisions. So it just works really well. Just wait for the Fed press conference to be done, and then go look at the market for decisions. We sort of talked a little bit about this in the daily brief today. Ironically enough, actually, if you have a down market heading into a Fed decision, that's actually a good sign for the other side of the trade. Sort of buy the rumor, sell the news. In this case, it's a sell the rumor, probably buy the news. Now, having said that, it's always a mug's game getting into the business of trying to predict the Fed. My simple advice is, remember, this is not financial advice. My simple opinion is, we'll put it that way, just wait for a full hour following the Fed announcement, sort of let the dust settle, and then we can start going and hunting ideas. With regard to actual market state right now, I think everybody's just sort of in hurry up and pause mode. And really the question for me at the moment with regard to the broader market is, do these weekly fractals actually start firing here on the US dollar? You can see on a weekly basis, technically we are in an area where if a top was going to come in, it makes sense. So 61.8 to 78.6, there is that zone. We have been consistently higher highs and higher lows, but, there is always the potential. You can see the three bars, bang, bang, bang. If we head through this low and finish the week through that low, then it seems to me that the bull will be on pause out of the States. Having said that, really it's going to be predicated on what the tone of sort of the message out of the Fed is. Do they cut rates? Do they say they're going to continue to cut rates? Do they say that the economy is really weak and it needs stimulus, yada, yada, yada? If that's the case, then I could see a massive run into things like gold, things like the Japanese yen, as sort of things are looking grim for growth across the board. I have put on Bitcoin's chart here as well, because I do see to a certain degree that Bitcoin also has come into a sort of a consolidation, just sort of pausing. And I think that Bitcoin actually, believe it or not, is very highly correlated with the international currency markets now. And so I think that Bitcoin right now is on pause, waiting for that announcement out of the Fed as well. And if we look at Bitcoin price, what I did notice specifically is we are at one hell of a battle level here. I mean, it doesn't often get this clean cut, where you can see where the bears have actually gotten their signal to go short. They're risking against these highs, and you can see the bulls are desperately trying to hold this in. We did go through this low, which again is, you hopefully can see the M's coming in here. I'm thinking that the market's leaning towards the bear side, but at the same time too, we're right in the face of that Fed announcement. And frankly speaking, I don't think it's in anybody's best interest to make big price predictions ahead of that event. Let's just let the Fed happen. Let it get done. Let's see the reaction on the other side of the Fed. Give the market a good hour to sort of settle down, and then we can start making decisions. So it'd be really interesting to see what this chart looks like this time tomorrow. My hunch is whichever way this thing really does want to break, it will be pretty clear tomorrow. So stay tuned, folks. Moving along with our chart deck, just a quick reference here. Risk on stocks looking a bit heavy up top here. I've talked to you guys, and of course I talk in the site quite a bit about my desire to have on a bit of an insurance policy heading into September, October. That's usually a dangerous time in the stock market anyway. We might actually just M out up top here. Tough to say what's going to happen just in the short term. I do like the idea of a cycle pivot somewhere around 25th of September. I've shown you that chart before. I won't go into a detail here, but really interesting. Now, as I had said earlier, you might find that the Fed comes out, the language that they use, the market likes what they're seeing, and by the end of today, we've actually moved a bit higher here. That could easily happen. Do find it fascinating. We'll talk a little bit about this more about crypto in a minute or two. But really interesting to see how gaps were honored here. We had a gap to the upside on crude that needed filling in from back in May. And you see how that launch higher on that Saudi event basically rallied the market up into that level, validated that. They left a huge gap to the downside. And I think you can actually make the argument that the market has now gone back into the gap. So 90% of the time, these gaps should be filled in. My hunch is, ironically enough, I could actually see crude work its way right back down to the bottom end of this range. Does that sort of risk off risk on off, excuse my French, I know that's confusing. Does that sort of play out and the stock market has to come down with it? Tough to say right now. Is this a good trade location for crude? Absolutely not. I would be interested in being a buyer down here and, of course, a seller up against the highs. Probably again, this time tomorrow, we should see some really interesting resolution. And then after the Fed meeting, we can start sort of hunting ideas. So that's sort of a little bit of a conversation about risk on. It's looking very heavy right now. And then if we flip that over and say, what does risk off look like? I found it interesting to see that I've talked to you guys in the public about inside bars, really cute little inside bar that fired on the bonds. Bonds have enjoyed a nice little 2-day rally following that event. Of course, this was straight line down, so it shouldn't surprise us to see a bit of a counter trend rally back to the upside here. And the gold, same sort of thing. I was kind of moaning and complaining that if I did want to get short gold, I wanted to be short off the top here. I didn't get enough of a rally to justify that. Maybe in that scenario where crude's coming back down, stocks are a bit soft, bonds are getting bid up, maybe our gold can work its way back up against the top end of the range. And of course, if we just blast off through the highs here, then I won't have a trade. I am interested in shorting the gold if we can rally up politely against these highs, put in a nice M, and top out something along those lines. It's going to take some time still, but it is interesting to see how the risk off is looking, risk on is looking heavy, and risk off is actually catching a bit of a bid here heading into the Fed. Nothing for me to do on either of these right now other than the fact that I put myself on a put accumulation strategy. I do have a bit of money on the long side in the stock market, so having a bit of insurance there is always a good idea anyway. Heading back over to crypto, obviously the talk of late is how wonderful Brian's call was on Aetherium and Litecoin recently. Toot my own horn. I mean, what's fascinating is when these double bottoms came in here, nobody in the public was talking about uppy altcoins. Nobody. And now when you go on these silly rags, and I gave a long rant on the daily brief today, you go on here and now all it is, oh, we're bull. And if anything, this scares the hell out of me because it feels like maybe they're walking into a trap. And why do I say that? Well, number one, can you turn on the computer and buy a Litecoin up top here? No, right? The double bottom's down here. Can you buy Ethereum up here? No, the double bottom was down here. So what ends up happening now is just on the short-term basis, especially around things like Fed announcements, we're actually starting to get early warning signs from our RSI study that actually we're getting overbought now. And then if we pull up something like an hourly chart, we see that, oh boy, this thing's actually come an awfully long way. And this is a kick in the pants. I showed this to people on the daily brief this morning. Notice if I'm not calling a top here right now because I don't have enough of a momentum structure to actually justify shorts here. But notice that if we just simply draw a reload zone from this current rally back down to the lows, look how the original breakout level is sitting right at Mountain Man level. I mean, that's remarkable. So, and what I'm worried about is when I actually pull up charts like Aetherium on things like Coinbase, hopefully everybody can see that, based on this rally right here, this failed rally, it tried to break out and then failed. If we just do a reload zone off of this range and that original fractal top, that paints this reload zone, and guess what? Here we are right in there. So, I'm not, it's too early for me to actually call shorts and say, oh my God, this thing's crapping out. But it's way, way, way too late for us to be buyers here, right? You can see where the W's are, and anybody coming in and just, this is what kills me is that, like the public, they don't understand how to read price charts. They load this up, and everybody's just like, oh, it's a new bull market. I gotta buy. And what I see is the potential for FOMO here. This is getting a little bit dangerous. And, a great example of how quickly crypto can move. This XLM here this morning, we were joking about it. They basically they're in cahoots with IBM. Didn't really set up a trade per se. And what I'm worried about here is this was a V bottom. We didn't really even have any things like fractals or anything off the weekly chart. And notice this rally. If anything, this to me looks extremely suspicious, right? All we did was we just went straight up, and on things like Coinbase, we just tagged Mountain Man and that original market structure top. And in essence, now you've got a whole bunch of trapped FOMO bulls that all bought this thinking they were going to get rich, and now they're trapped. And what bothers me even more is if we look at something like XLM off of like Phoenix, we see that lo and behold, just like I told you about crude, we've got a big old gap sitting right on the charts way down here. So, for heaven's sakes, people, do not chase this. You can see how we went to a new low here. So there isn't even any W's or anything working off of the daily charts. This looks extremely dangerous. And if we zoom out, right, you can see if I go and buy here, there's no reason why we can't come down, fill in the gap, and even really test this low in earnest. We'll finish off today with sort of people who are like, okay, well, Brian, what do I do? I saw the W come in on my coin. I was very interested in buying, but I'm not allowed to chase up here. So what do you do? And this is where we're going to take our reload zone tool and we're just going to draw it off of whatever the highs are. Notice reload zone lines up really nicely with this double bottom down here. If we change this to a line chart, hopefully you can see it nice and clear. Right there is the W. If you want to work your stink bid against the W, that's fine. But, at the very least, this is where we can start sort of considering, all right, I've missed the rally. Ideally, what I'd love to see for all you guys is she comes back down, puts in a W right in through the reload zone, and away we go. So I've been telling all my people on the site today, do not chase. Load your reload zones. Try and find where the original market structure bottoms are. You can work stink bids, but ideally we'd love to see a nice little pullback and then structure right in our reload zone for the next trade idea. And that's what I think a lot of crypto looks like. This just so happens to be one idea that we pulled together. So if you did miss this pop, for heaven's sakes, don't chase. And just simply be patient and disciplined and work your reload zone tools. It's quite remarkable how well they work. Okay, that's your daily recap for the day. As I said, we got big Fed announcement today. So don't trust anything you see probably for the next at least couple hours in the stock market. And tomorrow's daily brief recap should be really interesting. Okay, have yourselves a great day, everybody. All the best, and bye for now.